So, good evening, everyone. Welcome to SEBI Circulars session and welcome to CGBMentors. And in this session, we'll try to finish it up as much as possible about SEBI Circulars. In this month of December SEBI Circulars, there are very important SEBI Circulars. For example, in December, there is this meeting of SEBI annual board meeting, and that board meeting consisted of a lot more things that they wanted to speak on the stock market. So that is also there. This December circulars will be a lot more bigger as compared to other monthly circulars because there are a lot more master circulars also are here. For example, as you know that SEBI's 208th board meeting is also conducted. So a lot more things are there. And apart from that, we have master circular for issue of capital and disclosures. All these things are also here. Okay. So we'll take December circulars session by session. Let's start our first session and let's try to cover as much as possible. So first circular is about SMS and email alerts to investors by stock exchanges. Okay, so what does this circular say? It says that SEBI through master circular issued guidelines for communication of SMS and email alerts to investors by stock exchange. मतलब stock exchange को अपने हर एक क्लाइंट को SMS और ईमेल कब भेजना है, कैसे कैसे भेजना है, उसके रिगार्डिंग दे हैव issued guidelines. So what are those guidelines? We'll try to understand. So first, existing guidelines on mobile number and email address is what? That separate contact information for clients should be there. That for each client you need to have separate information. That means separate mobile number as well as separate email address. However, this provision was provided with one exemption, that if somebody who is also a family member, then you can use same mobile number for both individuals. If two members are related to each other as a family, then you can utilize same mobile number or let's say same email address, which was not the case if you are distinct individual, because if you are distinct individual, then both two individuals cannot have same mobile number. So exemption as well as family definition previously was what? Then individual, spouse, dependent children and dependent parents. However, the new clarification on exceptional circumstances have been provided. What is this exceptional circumstances? Because if you see this provision, exception for family members, in exceptional cases, brokers may upload the same mobile number or address for multiple clients. So SEBI has provided you with the definition of what constitutes exceptional cases. So what is the clarification? Based on representations from Brokers Industry Standards Forum, SEBI has expanded the definition of who can share the same mobile number or address. So for individual clients, family members include self, spouse, dependent children and dependent parents. That was also the case previously. But now they have increased or expanded the definition by including non-individual clients also. For example, that if you belong to Hindu undivided family, then shared by Karta or any co-parenter can have same numbers or same email address. Similarly, if you are a partnership firm, then all the partners can have same number or mobile number or email address. Similarly, shared by trustees and same case shared by corporates. So that's your first circular, and this is a very simple circular. From exam perspective, you just need to remember the definition of family or exceptional cases. That in exceptional cases, family definition remains the same: self, spouse, dependent children and dependent parents. And for non-individual clients also, contact details may be shared by authorized person of the following entities. Chaliye. Now let's move on to the next circular, which is repository of documents relied upon by merchant bankers during due diligence process in public issues. Now, all of you understand that whenever any company wants to go to IPO, whenever a company wants to list its shares in the stock market, so what does this company do? They contact a merchant banker, so that merchant banker can file various type of obligations or various types of filings to SEBI, so that SEBI can start the proceeding of your online application or your initial public offering. So in the process, the merchant banker files a lot more filings, a lot more documents, a lot more disclosures. So this circular is with respect to that merchant banker filing those disclosures. So what it is all about, let's try to understand this. So merchant bankers play a critical role in managing the public issue process. They are mandated to maintain comprehensive record of their due diligence activities. So the regulation 14 of SEBI merchant bank regulation says that the merchant bankers need to maintain records and documents related to both pre-issue and post-issue documents. Matlab, whenever you want to file your IPO application, before that, whatever you need to file as a document, so the merchant banker need to keep the details of all those records. And after you get listed on the stock market, then post issue, what are the various documents that you need to file with SEBI or any other stakeholder, that also merchant banker needs to maintain with itself, which is written under SEBI guidelines. So regulation 16 of SEBI says that mandate preservation of these records for at least 5 years. That both pre-issue as well as post-issue documents should be preserved by the merchant banker for at least 5 years from the date of issue. So this is one metric that you guys need to remember, that first of all, both of them are mandated to, make sure that they maintain records of pre-issue as well as post-issue. Next thing is that they are also need to make sure that they preserve it for 5 years. किसी को कोई दिक्कत? Nothing? Chaliye. So that was the background which you guys needed to know. Now, if we move towards the introduction of document repository platform, so this says to enhance the efficiency and accessibility of due diligence records, SEBI has directed the stock exchange to create online document repository platform. What does this mean? So stock exchanges are now mandated by SEBI to open up a particular platform where the merchant bankers who needed to do due diligence with respect to post-issue and pre-issue documents, so they can upload all those files on that new platform that SEBI is mandating stock exchanges to do. So that if we make schematic diagram of it, so what SEBI is trying to do, SEBI is telling to both exchanges, National Stock Exchange as well as Bombay Stock Exchange, that open up a digital platform where if a merchant banker who is responsible for making sure, let's say Mamaearth, IPO of a Mamaearth, so they will have pre-issue documents, post-issue documents, isn't it? So both these documents this merchant banker will preserve, and in order to do so, instead of them doing it individually, SEBI is saying that make sure these merchant bankers upload all these files on the digital platform established by the stock exchanges. Is this clear? So that it becomes much more efficient for these guys to do this thing. And apart from that, they are also needed to preserve all these documents for how many years? 5 years. So this is also another important thing. Any confusion? चलिए, next, what they are saying that merchant bankers are required to upload all the documents relied upon during the due diligence process onto the platform, which I was already telling you that whatever pre-issue, post-issue documents that they usually follow, usually do during the initial public offering, all those documents they need to upload it to the new platform which SEBI has mandated to exchanges to open. So merchant bankers will upload all the documents to this platform of each exchange. And this is the uploading timelines. From January 1st, 2025, they need to upload within 20 days of filing the draft offer document. This is with respect to pre-issue. And 20 days from the date of listing, post-issue. Okay. And from April 1st onwards, they need to do the same thing after 10 days. So pre-issue 10 days after and post-issue 10 days after. Any confusion till now to anyone? Please ask. These two circulars, किसी को कोई दिक्कत? If not an issue, then we'll start with the next circular, which is about revised guidelines for capacity building and real-time performance monitoring framework for market infrastructure institutions. So market infrastructure institutions are what type of institutions? First of all, you need to know that what are market infrastructure institutions. So, the basic definition is that these institutions or these infrastructure institutions are essential for market to function. So what if I remove what type of organization from the market, then you will not be able to do any transaction that you're right now able to do in the market. For example, if I remove stock exchange from the market, will you be able to do any trading or buying? You tell me, will you be able to do it? No. If I remove clearing corporations, will you be able to do settlement while doing buying and trading? Will you be able to do it? No. If I remove depositories from the market infrastructure, from the market, will you be able to store your stocks in demat form? No. And if I remove, let's say, brokers, will you be able to do trading just like you do via Zerodha or Grow application? No. So that's why these are market infrastructure institutions which are critical for functioning of the market. Okay, majorly these three. Now, when we talk about these market infrastructure institutions, and we've already understood the importance of these market infrastructure institutions, so naturally you would want them to not fail, or at least them to hold themselves, strong, hold themselves resilient, especially whenever any crisis occur, or let's say any peak performance occur. How do you establish the resilience of a system? You try to test that system. You try to test that system on its peak performance. For example, if I want to understand the performance of a car, I will try to, first of all, if I want to check the speed test, I would, at a single track, straight track, I would want to increase the speed of the car as much as possible so as to test at how much speed it can go. Similarly, if I have to check the ruggedness of a particular car and, testing the ability of tires to sustain itself on rugged terrain. So I would want to test it on that rugged terrain and that, as much as possible, as much as bad terrain. So similarly, these market infrastructure institutions, whether they'll be able to withstand peak performance or not, whether they'll be able to understand any attacks or not, that things we also need to check, and so that they become resilient. to whatever type of performance is required. For example, all of you remember that whenever the election result came last year of Lok Sabha, from exit polls to the final result, we saw multiple, you know, uh, multiple and high volume movement in the stock market. After exit poll, the market boomed, and then when the result came, it declined, and then further, we saw different kind of movements over there, isn't it? We saw a different kind of market, and there was huge amount of volume over there. But our national stock exchange as well as Bombay Stock Exchange were able to sustain that peak performance as well, which showcase that their systems are very much strong, isn't it? So that's why, and in order to sustain their performance, and in order to, let's say, make sure that their performance do not get degraded, this whole circular is released by SEBI. So now let's see what does SEBI says. That owing to increased market volumes and technological demands, SEBI has revised capacity planning and performance monitoring framework of these market infrastructure institutions. In terms of planning, is what we're trying to do is to make these market infrastructure institutions future ready. And how are we going to do this? By increasing capacity standards. So please see what do we mean by this. So installed system capacity must be at least 1.5 times the projected peak load. For example, let's say your whole exchange in the past 6 months in terms of volume have sustained, let's say, this peak. So this is the peak load that the system has seen in the past 6 months, isn't it? Now the SEBI circular says that your system should be capable of 1.5 times of this peak load volume. So if the volume is, let's say, 10 crores, then your system should be able to, deal with the transactions of 15 crores. This is what the SEBI circular has revised. So your main task for the exam perspective is to remember 1.5 times of the peak load. And how do you identify peak load? Where you must be having some kind of a window in which you want to see what is the peak load. So that is also is provided over here. So projected peak load must account for trends over the past 180 days. That means past 6 months, and be calculated for minimum of the next 60 days. Okay. However, the outer limit for sustained peak load shall be 10 seconds for stock exchange and clearing corporations and 5 minutes for depositories. That means, see, this peak load, it will not be like the peak load will continue for a huge amount of time. So the peak load will be like for 1 or 2 seconds, and then it will start declining. Okay, so peak load maximum at which they need to prepare stock exchanges as well as clearing corporations is for maximum 10 seconds. So that peak load, if it continues for 10 seconds, your system should be capable of handling 1.5 times of this peak load for 10 seconds. This is what they are saying. Understood? First of all, they are saying कि peak load के 1.5 times you need to make your system capable, and even you also need to make the system capable for sustaining that peak load for 10 seconds if you are the stock exchange or if you are the clearing corporation. But peak load sustenance for 5 minutes should be done by depositories. Is this clear? Any confusion to anyone? Now, if we move towards the next thing, which is utilization monitoring. So what does this say? An asset register must be maintained tracking IT components usage. That means, apart from you monitoring the peak load, the systems or the market infrastructure institutions also need to maintain a register which tracks that how much of their IT components is being utilized during that peak load. So they will maintain a register and will put the information whenever the IT systems use their capability more than 75%. Because after 75%, you will be able to know that now the IT systems are, coming towards their peak. So we need to control anything. Okay? So it's like a threshold which tells you that you need to now control or make sure that at least if frequency of increasing your IT utilization is getting 75% more than few times, then you need to know that you need to increase your IT systems capability. Okay. And lastly, policy and governance. Market infrastructure institutions adopt a capacity planning and real-time performance monitoring policy, which should be reviewed annually. Okay. So any confusion in this whole circular about market infrastructure institutions to anyone, please tell. Nothing? Chaliye. Now let's move on to the next circular, which is about enhancement in the scope of optional T+0 rolling settlement cycle in addition to the T+1 settlement cycle in equity cash markets. That means in normal stock markets, not derivative markets. So first of all, the first thing that they are saying is, in order to understand that what do we mean by T+0 and T+1 settlement cycle. See, think about, for example, when you go to the stock exchange and when you place a buy order, you get the stocks only after, 1 day. You do not get the stocks instantly. Similarly, even if you place the sell order, you do not get your whole amount of money today itself. You get it after 1 day. You may get 80% of the amount, but the full amount is, credited in your account after 1 day. So this is what we call T+1 settlement cycle. That means the transaction is settled. That means no obligations with respect to the buyer, no obligation with respect to the seller will be done after 1 day. But then SEBI thought about T+0 settlement cycle. That means whenever you put, or on whichever day you put your transaction, that means today if I put transaction, after the market hours, you will get the whole money, or after the market hours, you will get the whole stock if you put the buy order. So this is T+0 settlement cycle. Now, T+0 settlement cycle was, launched by SEBI previously in the last year. And this was launched additionally to T+1. That means T+0 was also going on, T+1 was also going on, because T+1 par to abhi chali raha hai. Now they are also utilizing T+0 in order to test that how this T+0 is functioning in the market and whether it is viable or not, or we should go back to T+1. So this is what they wanted to check. And after checking, they've realized something, that it is, functioning very well. So now we can further upgrade it. So initially when T+0 was started as a pilot project, it was only applicable to 25 stocks. There are a lot more stocks in the stock market, but T+0 settlement cycle was only applicable to 25 stocks, which is mentioned all over here. So you see, T+0 settlement cycle on an optional basis for 25 scrips or stocks was initially enabled. However, now what the SEBI circular is saying, that top 500 stocks will also be included in the T+0 settlement cycle domain. Okay, top 500 stocks in terms of market cap. Market cap कैसे निकालते हैं? How do you calculate market cap? Stock price into number of floating shares. Okay, but obviously as a whole they will not do the same. They'll try to do it gradually. So the rollout will start with the bottom 100 companies. Then additional 100 companies will be included each month until the entire list is covered. Okay. So these are obviously in addition to the existing 25 scripts. मतलब जिस पर already चल रहा है तो वो तो already चल ही रहा है. उसके अलावा जितने भी stocks बचे हुए हैं उनको फिर bottom 100 then additional every month will be done. And then apart from stocks, other participants will also be included in the T+0 settlement cycle. All stock brokers will be allowed to participate. They are also permitted to charge differential brokerage for T+0, T+1. For example, normally Zerodha charge you something for T+1 settlement cycle. Now they are allowed to charge you any other thing. For example, in T+0 you get your money instantly, isn't it? So they can charge you more brokerage. Let's say instead of 250 rupees, they can charge you 350 rupees, something like that. Similarly, qualified stockbrokers meeting the required number of active clients must implement systems for investor participation in T+0 settlements. Similarly, block deal window for T+0 settlement cycle. Block deal, that means block deal are those type of deals which is usually about buying and selling of huge amount of shares and huge amount of percentage of shares. For example, if a promoter wants to sell 7% stake in its stock, in its company, so that is a block deal which is being transitioned from one party to another party. So for block deal and T+0 settlement cycle, what is mentioned? A block deal window for T+0 settlements will be operational during the morning session, 8:45 to 9 a.m. And what is the operational and reporting requirements? That market infrastructure institutions must publish trading, clearing, settlement, risk management guidelines on their website, and they will also submit fortnightly reports on T+0 settlement activities until further notice. Any issue to anyone with respect to this? किसी को कोई दिक्कत? In understanding all these 4 circulars that we have discussed now, if you have any confusion with respect to any of those circulars, feel free to put it in the comment box. If you're watching it later on, then we'll try to address it as soon as possible. Okay? So this is all from my side from this session, and we'll continue December session tomorrow. If you have any question, feel free to ask. Otherwise, I'm winding up the session. Thank you.